So one of my students, he's from France. Originally, he's from Romania. He bought this stock. This is called MLR, which is Miller Industries, and this is listed on NYSE. So he bought the stock on this day, which is 5th of November. The volume is low. I will discuss this. And he sold on this candle. So within a couple of days, made a decent return. Okay, so if we measure that return, roughly he bought at the yellow line. Somewhere here he closed. So 9.65%, roughly. Okay. So let us discuss this stock. Let us try to understand what he was looking for on the chart and the fundamentals of the company, which allowed him to take this trade confidently. And he has made one or two mistakes in this trade, which I will discuss. See, just because you make profit on a trade doesn't mean that it was a great trade. You have to also understand how have you made any mistake while taking the trade or while managing the trade. Okay, there was one mistake while executing the trade, and there is another mistake while managing the trade. So I will discuss both of the mistakes, but we will look at the positives and the negatives of this trade, which is very important. So as we look at any stock, I do three kinds of analysis. One is comparative analysis, one is technical analysis, and one is fundamental analysis. So first we will look at technical analysis. So just before this day, okay, so if I hide this is what my student saw. This is what he is looking at. I have drawn this base for you already from here till here. Okay. Now, if you notice, the price is above the blue line. The blue line is above the green line, and the green is above the red line. So 50-day moving average, 150-day moving average, 200-day moving average. So we have the blue, green, red combination. All the moving averages are sloping up. The price is above all the three moving averages. Okay. So that's a strong stage 2 uptrending stock, which is forming a base. So see, this is forming a base. It has easily more than 10 candles in the base, which is what I look for. And regarding points, if we draw the consolidation, so from here, the price comes here 1, 2, 3, 4, and 5. Okay, so that's the consolidation we are looking at. Moreover, you see the mother baby candle combination, that's like the icing on the cake. So this is called as an inside bar. So after you have an inside bar or a mother baby candle combination, there is a high probability of a breakout, but that breakout could be upside breakout or downside breakout. We still have to wait for a confirmation. So point 3 becomes our buy point, which is why we draw the yellow line there. And good thing is that the yellow line is in the green zone. So that's a positive factor in this trade. And the distance between the current closing price and the yellow line should preferably be less than 5%. So in this case, it is just 2.5%, which is fantastic. Okay, so technically, the stock looks strong. In fact, the stock is also above the short term moving averages, not just the medium term and the long term moving averages. The green and the red are the long term moving averages, the 150-day and the 200-day. The blue is the medium term moving average, which is the 50-day simple moving average. The orange and the purple are the short term moving averages, which is the 8-day exponential and the 21-day exponential moving average. And you see the price, the current closing, it is above all the moving averages. It's a very positive sign. So technically, the stock is strong. If you notice, while the price is consolidating, volume, majority of the time, the volume remains below the blue line. So low volume consolidation. Okay, that is what we are looking for when the stock is in stage 2. If you notice, when did the stock enter in stage 2? If we just go back, when did this blue line go above the green line? So see here, At this stage, the green enters above the red line and the blue is already above the green line. So blue, green, red combination starts from here. So somewhere around February 2023. And now, as I record this video, this is 10th of November 2024. So it's been almost 1 year and 10 months. Okay, so almost 2 years, the stock has been in a stage two uptrend. Okay, so blue is above the green, green is above the red. That's the basic criteria. The stricter criteria is the price is above all the three moving averages. So during these 2 years, sometimes the price has come back below the at least the blue line, sometimes below the green line, as you can see here. But just purely looking at the moving averages, ever since February 2023, the blue has been above the green and the green has been above the red. This is the reason why a stage two uptrend is very important. We have to get involved in stocks which are in a strong stage two uptrend. So now that you can see clearly on this chart that since 2 years the stock has been going up. The stock has gone from $24 roughly to $68. That is how much? That's more than 150% return in a couple of years. That is fabulous. So more than double. Okay, it's almost tripling now in just 2 years. So which means what? Why are we looking at this long-term chart? It means that the stock is in a late stage base. Okay, we are buying the stock late. The stock has already had a fantastic advance. Okay, so we are probably buying it late. Okay, probably. I'm saying probably because I don't know what is going to happen next. The stock might double from here as well. But just by looking at the recent 1 or 2 years of data, the stock has gone from $24 to $68. That's a huge move in just 2 years. Okay. And I'm sure there are fundamental reasons for that. But from technical point of view, we are buying a late stage base. As you can see, when the stock has extended much beyond this price, it starts to become volatile. Okay. That could be a sign of stage three, where the stock just flattens out before it starts declining. So that's a risk we are facing. But overall, technically, if I have to rate this stock technically on the scale of 10, I would give it a 7 or 8. Okay. Just because it is late stage doesn't mean that we don't buy the stock. We buy, but we manage the position. Okay. And this is about technicals. What about fundamentals? So you click on financials statement. If you see this green color all the way, so there is growth in revenue almost every quarter since past 6-7 quarters. That too double-digit growth. Fantastic. What about profit? Green all the way. So triple-digit growth, double-digit growth all the way. No problem. Although this is declining, the growth rate is declining, but the growth is there. Okay. The recent growth is almost more than 35%, which is fantastic. What about margins? So I go to statistics, I click on annual. Let us look at margin, net margin gone from 3.74 to 5.52. So the margin has also expanded. What about return on equity? Gone from 11.87 to 20, so almost doubled. So the margin is expanding. There is double digit sales growth quarterly. There is double digit earnings growth quarterly. Return on equity is more than 17%. What else do we want? Okay. That's a very strong stock fundamentally. So the stock is technically strong, fundamentally strong. What about comparatives? Now, I was having a meeting with some of my students yesterday. I meet my students every Saturday with those who are interested to learn further. So I had a meeting with them, and my student who took this trade, he said that the relative strength of the stock was more than 90. So this stock is among the top 10 percentile in the US stock market in terms of its 52-week performance. So the So comparatively, the stock is strong. Technically, the stock is strong. Fundamentally, the stock is strong. Okay, so in such cases, when it comes to trade management, we should avoid selling the stock because we are with a strong stock. And even if we sell, it makes sense to sell less than half. So partial selling. So no need to sell half. It makes sense to sell less than half. We want to keep as many shares as we can to ride the stock if it continues to remain above the blue line, because this is a positional trade. A stock which is strong in all the three departments, that's a positional trade. Okay. So now let's come to trade execution. For trade execution, see what happened next. The stock broke out, volume was not great. And this was the Trump rally. I call this the Trump rally because there were elections on 5th of November and Donald Trump won the elections, and that some of the stocks just skyrocketed in price in a very short period of time. So this stock shot up almost 9% from the previous day closing in a single day, creating a rising window. Okay. And on the next day, my student waited one more day. Next day, there was this doji candle. So he decided that he want to uh, do a partial sell. Okay. So out of, let's say, 100 stocks that he bought here, he sold 20 shares. So he sold, I think 25, yeah, 25% he sold. He's still holding on to, no, wait, I think I'm forgetting. He bought, uh, let's say, 100 shares here. On this candle, he sold 25% of the shares. And on this candle, he sold almost all shares. Okay. And that, in my view, was a mistake, if I remember. Since we discuss a lot of stocks in the meeting, I forget the names of the stocks. But anyways, I think he's out of this position. And I discussed with him why should he not have been out of that position, because a stock which is strong in all the three departments, comparative, technical, and fundamental, we should really hold on to the stock. We should not give away our shares so easily. So let me discuss what mistake happened in this trade. So as you can see, while executing the trade, okay, generally we go to 15-minute chart, but my student, he did not go to the 15-minute chart. He decided to execute the trade on the daily time frame itself. And the volume was low. So that itself is risky. On a low volume, he is entering a stock at the yellow line. So now the stock is vulnerable to crash. Okay. So he is willing to take that risk. So he took that risk maybe because he has made profits on some of his previous trades. So realized gains give you the ability to tolerate more risk. Probably that is why he took this trade. Moreover, realized losses in the recent past reduce your ability to tolerate more risk. So, if he had realized the losses in the recent past, probably he might not have taken this trade. But since he is having realized gains in the recent past, that could be the reason that he has taken this trade, because the volume at the time of the breakout is very low. Okay. So he has taken risk. So just because the stock breaks out doesn't mean that your decision is right. You have to look at the decision from the risk management perspective. You have to wear the lens of a risk manager whenever you look at a breakout day. Okay. So he took risk here. From a risk adjusted point of view, this is not a great purchase. Okay. So he took risk here. Number two, he should have sold half of his shares on this day, because you only have price confirmation. You don't have volume confirmation. At the end of the day, the price closed above the yellow line, but the volume did not close above the blue line. So you ideally need both confirmations, price and volume. And if you don't get one of them, then it's better to cut your position size by half, because you are not getting what you want to see on the chart. So to control risk, you have to cut half of your position at least. Okay. So that's another mistake he made, that he did not sell half of his position. So he took overnight risk. What is the meaning of overnight risk? Well, Donald Trump won the election, stock shot up. But what if the result was on other way around? What if Kamala Harris won the election? Maybe the stock could have collapsed 10%. We don't know. Nobody knows what is going to happen in the market. That is what I call overnight risk. Now, his position size was small. That's the right thing that he did. That he controlled the risk at the position size level itself rather than controlling the risk with the price and stop loss movement. So, this is one way to compensate for the additional risk that you're taking on the stock. Please watch this discussion on risk 2 3 times at least. Please watch at least this part of the video 2 3 times. This is extremely important because I see traders getting excited when their stock goes up without realizing the fact that during execution they have committed multiple mistakes. Okay, so one mistake was buying the stock on the daily time frame chart, not micromanaging the trade. Second mistake was taking overnight risk. Third mistake was not selling half of the shares. Okay, because there is no volume confirmation. The stock shot up the next day. He sold 25%, which is good. Selling on strength is never bad. In fact, I would say partial selling of stocks is never a wrong decision because if you don't partial sell and if the stock crashes down 10% the next day, you have made the wrong choice. Okay. So partial sell is never a wrong decision. So he sold 25%. And on the next day, he sold all because he's getting almost a double digit return. I said 9.65, but probably he must have sold somewhere here on this day. So 10.20. So if he's getting a double digit return in just a couple of days, that's a great way to capture profit to finance the risk on your future trades. Okay. But what's the mistake here? Now we have to wear the lens of a trade manager, not a risk manager. Here I am looking at the stock from a risk management point of view. Here I am looking at the stock not from a risk management point of view, but from a trade management point of view. You remember I said a stock which is comparatively, technically, and fundamentally strong. Why would you sell all your shares? It is in the first place, it is very difficult to find such stocks. And if you end up finding a stock, and if you end up getting involved in a breakout like this, where the stock shoots up 10% in a couple of days, your goal should be hold on to those stocks, as many shares as you can. So, from a trade management point of view, selling 25% here was not a mistake, but selling the remaining 75% here was a mistake. At least he could have sold another 25%. Okay. But selling all is a mistake because the stock is fundamentally strong. It could continue to go up. It could double from here. We never know. If the company does well in the next couple of years, it could go up even further from here. I have seen stocks which have created 8 bases over a period of 12 to 18 months. Okay, 8 bases. Normally, fifth and the sixth base is what I call a late stage base. But I have seen stocks create that many bases because the fundamentals of the company kept on improving. So I hope you understood what I'm trying to convey here. Just because you buy a stock and just because it goes up and just because you make money doesn't mean that it was a perfect trade. A perfect trade is where you control the risk, you manage your position well on the breakout day and on the day when you want to partial sell. So, good stock selection, good trade execution, good risk management, and good trade management. These are the characteristics of a well executed trade. These are the things that will help you in the long run. Okay. So, I hope you paid attention to the mistakes that were being made and not just the money that was being made here. This is extremely important. So I hope this video has added value to your trading journey. Please share this video with your friends, family, and business associates who genuinely want to become professional stock traders. Please like, comment, and share this video so that this video reaches those people who need this material, okay, who need this kind of basic training. Okay. Thank you so much for your time. Thank you so much for your support on this YouTube channel. And one more thing, in the description of this video, you will find two checklists. One is a swing trading checklist, and one is a position trading checklist which I created. Some of you subscribers have asked for this checklist, so I created the two checklists and placed the link in the description so you can download them. These are basically questions that you should ask yourself before you take the trade. So I am not spoon feeding you, I am just giving you a set of questions you can ask so that you don't miss out on any criteria. These are guidelines, not rules. Okay, so please download those checklists. You will have to enter your name and email ID there so that you can come on my email list. Okay, where I can add even more value to you. Okay, thank you so much for your time again. I will see you in the next video tomorrow. Thank you so much.